The Bitcoin chop continues. Altcoins signaling nothing at all, but we do have some bullish divergences that we have to go through that look like they could be setting up. Are we going to see a relief rally, or are we about to see markets break down further? We're still seeing uncertain, unclear, scary times ahead, potentially, if we do not get some of the tariff negotiations sorted. Everybody get this retweeted, share this on your walls on X. Shout out to everybody watching on YouTube and on X. Big love to the entire family here in the BitLab as we're watching markets just chop around, giving us unclear signals. But we've got one signal that is really giving us an idea that there may be a reversal inbound. The question is it going to be a relief rally, or is it further crash in the stock market, further crash in Bitcoin, and meltdown in altcoins in the cards? Let's talk about it. Let's go. Feels like we're at max frustration, max confusion in the markets right now, and it's reflected in the charts. We are seeing some signs start to present in Bitcoin and in some altcoins that there could be a potential relief rally in store. We need to be very vigilant on what we're doing, what we're looking at in the charts. But when we zoom out just very quickly and look at the year makeup of the composition of bullishness or bearishness and how they've performed, look at this. Majority of red. We're getting a couple little green nodules in here, some different coins that have pumped within the last year. And then you get over here into the monthly charts, mostly red here. I guess gas rises. We got Fartcoin up 134%. But what we're seeing, majority of the coins are still having some trouble. When we get a little bit more near term on the weekly, almost all red. Of course, we got all green, nearly all green on the daily. Is this a relief rally? Because we're seeing on the hourly, every single thing on here is red. What are we to do? What are we looking at? We're going to run through a couple of the headline stories, and then we're going to be diving into a bunch of TA. So stick around. Make sure you retweet this. Make sure you follow here. Share this with your friends. Drop a comment down below if there's something that I missed or something that you think I should be paying attention to. Because when we dive in, what are we seeing right now? Other than this is actually interesting and beautiful here. The extreme fear, yes, on the stock market and on crypto. But what we're seeing is that this is like the world is ending for those in TradFi. And yeah, people, there's some fear here in the crypto Bitcoin market as well. But it's, I mean, crypto, you're born into the volatility, whereas TradFi literally thinks the world's over. I just thought that was interesting, the various ways that we're handling the volatility expectations in this market. Now, continuing on, we can see right here, we had some green in the charts. I mean, this morning we saw a pretty nice pump in the markets, 2 trillion added very early in the stock market trading day today. But then almost immediately after, we've seen a lot of things have a bit of a drawdown. Again, while these news stories are still going to be chopping around until we get on better equal ground, even footing on what's happening in the stock market in regards to certainty. Where is certainty coming from? Certainty is coming from what's going on with the trade war, what's going on with the tariffs. Are tariffs even the point, or is it just a big stick to get people to the table so they can negotiate? All that, the whys don't matter. We need certainty in the markets. And when we're seeing China, which Trump identified yesterday that there is going to be an additional 50% tariff on them if they did not remove the 34% reciprocal tariff that China put on us. It's a lot of tit for tat going on right now, and this is causing volatility in the market. So you got to be vigilant here, or just allow yourself to be patient and let the markets essentially work out what the forward-looking ideal sort of direction is going to be in the market. So this felt good, but was it short-lived? Well, we are seeing this morning, I shared this, we are seeing a bull divergence form on Bitcoin. The bull divergence on the daily chart. This does not mean a full reversal and all the bears are dead, but it is a start to an attempt at a relief rally at minimum. That's why I said stay cautious. Remember that reversals take more than just a bullish divergence. Let more confirmations come. In this case, we'll be talking about price action moving up, coming back down, getting rejected. You want to see that at some point because you want to see where the bulls come in and defend a price level. If this pushes up and it's rejected and comes down and forms a new low, it's not the end of the world. It just means maybe we're going to have a further bullish divergence, or without that, maybe a signal that we're going to have further continuation to the downside. We're going to be diving into a much more TA, so don't worry. We're getting into TradingView, we're getting into the charts, but I got to cover some of this stuff first. How you doing, by the way, everybody? Good to have you here. Good to see you. If this is your first time watching BitLab Academy content, I love you. I appreciate you. Try to keep you on the right side of the trend by sharing non-biased or as non-biased as possible breakdowns of data, on-chain, technical, and the context of the news, so that you can form a healthy direction and position on what you are expecting in this market, so you can stay on the right side of the trend. I hope I can uplift you as well. Welcome to the family. Now, diving back in to what we're seeing, we got a lot of data to cover today, everybody. We are seeing other pressures outside of crypto, because this is all signal as to, are we in a risk on liquidity flowing, or are we in a risk off? Let's protect our assets. Let's reduce our risk. Let's hedge ourselves. Let's get out of especially the riskier plays. Bitcoin is perceived, I don't think it's more risky, but in the near term is perceived as more risky than a lot of other equities, commodities, assets that are out there. And so it is, for the time being, still trading like tech stocks or like these risk behavior assets. But when we're looking at the NASDAQ and we see that we got this bearish divergence, bearish divergence, bearish divergence, bearish divergence, bearish divergence, what happened? This had a drop and a kind of a meltdown chop to the downside. In this case, we saw bearish divergence led to a 24% drop. This bearish divergence here, 37% drop. We're only about 25% drop right now, in addition to the moving average here turning red, signaling that we may have a bit more downside. We also saw let me say this again. We also saw Larry Fink say that it wouldn't be out of context to see an additional 20% drop in the stock market in the very near future. So this has got a lot of people on edge. There's even some debate as to whether we're going to get a Fed interest rate cut by, May or by June, because those numbers are just going back and forth right now, with the bets on the CME FedWatch tool yesterday going almost as high as about 50%, now dropping down into the 23% zone or something like that. Let's actually look. Yes, exactly at 23% in June. That's the June timeframe. What are we looking at for May? Yeah, so May is 30% now, potential rate cut, and June is 28% this would be a rate cut right here, 66%, because we're currently at 425 to 450. That's this. This would mean staying the same. This is showing the bet is at 66.5% here, trading in the CME, are suggesting that they're thinking that rate cut's coming at this point. But these numbers, especially for May, these numbers have been jumping up and then coming back down with every swing of the tariff headlines. So that's why when we're looking at the market, we're seeing more volatility, but the volatility can be a signal as well, which I'm going to get into in just a moment. Again, welcome everybody that just tuned in. We're going to be getting into quite a bit of TA here with Ethereum, and I just want to just show you all this, guys, really quick. Just a little bit of a preview. We do have beautiful bullish divergence right here on Bitcoin. Yes, the RSI higher lows, while the price action is lower lows here. Now, in Ethereum is not showing that yet. Ethereum is looking just continually weak. It's sad to say for those people that have been holding Ethereum, but we are seeing sort of a divergence here in the rest of the altcoins. XRP still holding within this structure. It's got a bullish divergence here with lower lows on price, higher lows on RSI. Solana, nice bullish divergence here. Lower lows here, higher lows. We got Link also showing, this tapped all the way down to that $10 mark, $10.25, which is within this structure that we've been highlighting for months. And this came all the way down into this, and now we're showing signs of strength right on the start of this bounce. We also see Render looking a bit weaker. No clear divergence here. There was a kind of higher lows here on RSI, but double bottom here so far on Render. Avalanche showing bullish divergence, lower lows, higher lows. We got HBAR with some news today and their integrations with CCIP on Chainlink. but not quite giving us any divergences yet. See lower lows, still lower lows, but this is sitting there flirting with this trend line that we've had for some time here. If this can break out, doesn't mean all systems go. It does, potentially mean a bit of a relief up into the zone. We want to watch if it can hold on the retrace back down for a confirmation break of this high. But as it stands right now, this is still below this. So there's no signal there. It's exciting to get good news. It doesn't mean it's going to be fully reflected in buying pressure in the markets, which is what we're not quite seeing yet. Now, this was a decent bounce, though. HBAR saw, look at this. This is, I mean, you can't say that you're mad at a 33% bounce off this low, but it does look like it potentially could get overheated. We're going to get into some smaller time frames. This is the daily. We're going to look at the smaller time frames for some better signal here in a few minutes. But I just want to kind of highlight some of these things because SUI, bullish divergence here. We got the lower lows, higher low on RSI. Toncoin, we had the bullish divergence, which kind of foreshadowed, signaled this large bounce. This did get rejected right at perfectly at the 382. Look at this move. The signal is there with the fib from the top to this bottom, came right into the 382, which is not a very bullish signal if this can't even get up into the golden pocket. So for the time being, this bullish divergence did play out, but now is essentially exhausted. We need to wait for another signal here on Toncoin. Curve, no bullish divergence, but similarly, that move already played out. It's getting a similar sort of retrace back. We got Tau with the bullish divergence, so this is not played out like Curve and Ton as we just highlighted. Crow coin, we had no real signal here. We had a lot of that basically news headlines that really gave it a bit of a pop before, but look, this came right into this golden pocket. We talked about this potentially setting up a bit of a bull flag. And if it failed, this was likely going to come back and test the 382. And if it lost that, it was coming back down here. This is exactly what it did. Aerodrome just feels like it's just taking the train downtown here, but I'm so bullish on the mid to long term of Aerodrome. I just bought, was it 2 days ago? We just added about $1,000 worth of Aerodrome. I think it was at 35 cents. So, I mean, I still think this looks great, but we don't have a signal currently at this point here. When we bought, where did we buy? We bought somewhere right in here on smaller time frames. There was a little bit of a bull div, and this was also sitting on this lower bound of support. But as it stands right now, this is falling through, so it does get a little bit worrisome. But this does mean, if we're very bullish on Aerodrome, the DEX for Base, the Base ecosystem, Coinbase, the custodian of the majority of the US-based Bitcoin ETFs, in addition to the Bitcoin DeFi possibilities that could come out, especially with wrapped Bitcoin on Base, all transacted through Aerodrome, and the amount of volume that Aerodrome does, and hints that they might be processing foreign exchange transactions on Base through Aerodrome. That would just be monumental. And then we get down over to DAG, no clear signal here yet, basically flat RSI. And this is basically double bottomed for as it stands now. And just shout out real quick, the CEO or the founder of DAG, Ben Jorgensen, he had his X account hacked, but he did get it back. So that's all good. That has nothing to do with Constellation DAG protocol itself. But his X account is now back in his custody. I was chatting with him last night. Ondo, nice bullish divergence here with these lower lows coming right into the box that we had outlined some time ago. It's almost as if we've been nailing these signals, everybody. But nice bullish divergence here. Let's see how it plays out. This does not guarantee a pump. It just shows the conditions for a pump might be setting up. Cardano, bullish divergence here. I mean, this wick really kind of makes it a little muddy, but if you're looking at all these candle bodies coming down like this, lower, 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 the RSIs have just been higher, higher, higher. And even this point here, even from the bottom of the wick to this is a lower low. This is a higher low. So I would keep my eyes on Cardano moving forward. Now let's get back, Now let's get back and look at what do we want to do? I got so much I want to share with you. Well, that's it for the TA just breakdown highlights. We're going to be diving back into this here in a couple minutes, but let's go through some of these other stories I wanted to highlight before we move on there. I see we got about 1,000 people in the room between X and YouTube. Shout out to everybody that's here. Make sure you're hitting that like button, subscribing, dinging the bell, showing some love, get engaged, get in the live chat. I can see you all here. Let's see. Got a nice active live chat today. So big love to everybody here. Let's continue on. Get a little distracted here. Right here, this is what starts getting exciting. We had an all-time high record volume for the SPY yesterday, 123 billion and counting for context. The average is 25 billion. Now, this is important because when you have a shit load of volume on an asset, a lot of times it can signal a top or a bottom. It's almost into max exhaustion up or into max exhaustion to the downside. Now, this does not mean the exact price point we're at right now on the stock market or on Bitcoin has exactly hit the dollar bottom of what, but regionally, this could, it's one of those ingredients, could be signaling that we may be getting to that point. The problem with this is right now, the problem with some signals we're looking at right now, if we're looking at them independent of the broader context and narrative of what's going on the world stage, then it gets a little muddy because all your models are broken right now, considering that the administration is doing things on a geopolitical stage that is shaking certainty to uncertainty to certainty on major multi-trillion-dollar impacting deals. So if you got a bull flag and it's supposed to push and break out to the upside, it might not fucking matter. Okay. You've got to be vigilant here. You've got to be careful and you've got to allow confirmations to come in so you do not get caught in traps. There's very high likelihood there will be traps in both directions on many different patterns that you're seeing potential for breakout. You may actually break to the upside and then get a news story that comes out about what's going on with Trump and China. And that just completely reverses the sentiment in the market. So be careful, trade safe, because we have so much bullishness coming to the crypto market over the next, millennia. But right now we're in an extreme chop zone. So be careful right now and take advantage of the opportunities if they are presenting themselves, because they are abundant right now. The question is, do you have the fortitude to hold, or are you going to actively trade and be vigilant and actively trade so you don't get caught on the wrong side of things, especially in leverage? Now, jumping back in to the charts, to the data, we got some other things. We're witnessing historic trading activity. The daily U.S. options volume surpassed 100 million contracts for the first time in history. Option volume has exceeded the previous record set last month by 19 million contracts. U.S. stock and ETF put option volumes alone hit a record 53 million contracts. Put volumes have now surpassed a previous high posted during the March 2023 banking crisis by 16 million contracts. So there's a lot of heightened vigilance and focus and hopium and fear in these markets right now. It's created. We saw a $7 trillion swing yesterday in 30 to 35 minutes on the S&P 500 on the rumor that we're going to get a 90-day delay on the tariffs. And then it turns out it was rumor. We had the 4 trillion pump, 2 trillion drop, 2.5, 3 trillion drop, and then kind of stabilized, but a lot of volume. There's liquidity that's ready. Everybody's just aggressively de-risking and then aggressively re-risking, which is providing these major swings. Let me say this, if the S&P 500 could have a $7 trillion swing in the course of 30 to 35 minutes, you do not stand a chance trading leverage on Bitcoin and crypto and altcoins unless you have an absolute strategy that you're holding yourself to and you're not jumping into or jumping out of trades because of hope and fear. You need to have a clear execution because this is an absolute monster of a jungle right now. This is a dog-eat-dog world. This is a battleground. And for most people, you should be staying out of this battle, staying on the sidelines, allowing the trend to define itself as we are in an ultimate chop zone. That's my recommendation. It is not financial advice. This is do not lose your ass advice from somebody that's been in these markets for some time. Now, let's get back into it. We got more to cover. We're just running through it today, guys, because I want to get to this TA. China just had its worst single day crash since 2008. Why do we care about this if we're trading Bitcoin, altcoins, some of you meme coins? It's because it affects what's going on a global liquidity landscape. That's what it affects. So if we're getting a massive stock crash in one day, as big as we saw since the great financial crisis in 2008, what do you think that means? It almost seems like the tariffs aren't just about we should be tariffing people. TJ and I were talking this morning. Let me say this on full screen. TJ and I were talking this morning. Maybe Trump's tariffs aren't about having tariffs. Maybe Trump's tariffs are about let's get the world as close to no tariffs as possible. Shaking this big stick out there is completely jacking up the stock markets and world markets the world over. However, what if I suggest that maybe the tariffs aren't the point? Maybe the tariffs are the big pressure that's causing uncertainty in markets, that's bringing force to bear economically, that will bring as many countries as possible to the table. So say, hey, why the hell, you know what? As minimal tariffs as possible or no tariffs, in addition to just having better trade deals the world over. That we're getting pressure on the markets where we have, $7 to $9 trillion in debt we have to refinance this year. We need the 10-year to come down. We need the Fed to cut interest rates. We need all this to tackle that. And the tariffs are kind of having a multifaceted approach here. I don't know. Nobody does. But we got to take it with a grain of salt as we're seeing pressures on markets, and how does that affect what we're doing in our assets? China's stock market crashed worse since 2008. And then we see right here, why does this matter? Trade deals with other countries are great, but what truly matters is the negotiation between the US and China. The trade between these two juggernauts is quite literally the lifeblood of the global economy. 50+% mutual tariffs is not a tenable outcome. Put the egos aside. And then he goes on to say right here, negotiations can be done without pulling a pin on hand grenade with everyone in the room. Thin line between hard use of leverage and antagonization. So we gotta really be careful here about what we're doing, because we're also seeing some pressures come in where, look at this, China vows to fight to the end on tariffs as it props up markets on, as you can see here on Bloomberg. They're starting to prop up markets. This goes back to this chart right here that we have been tracking since, we've been tracking this since, where are we at? June 2022, or would have been somewhere, I think it was back in this area here is when we started the channel. BitLab's been around since before we had the YouTube channel, but watching the global liquidity and how it impacts what's going on with Bitcoin is a major impact. Global liquidity in blue down. We see Bitcoin price trending down. Global liquidity trending up like a mofo. Took a little bit of time to catch up here on the asset prices, but then look, parabolic turn. Look at this. Global liquidity down. Pretty big correction here on the Bitcoin. Global liquidity started ticking back up, and then just steadily fuel on the fire, just pushing more and more into these risk assets. Well, we're kind of bumping our head up against right here, the next leg. And remember, we had massive liquidity injections, money printing the world over following the global economic crisis in March of 2020 from COVID. The problem with money printing, the problem with fiat is why I'm so bullish on Bitcoin. Because you've seen when they print money, each time it's almost to an exponential effect. So if they printed some trillions of dollars in the last time they did money printing, especially look the world over, this time is only going to be bigger because the problem gets more exacerbated and we have more money that's needed to kick the can down the road. Now, Bitcoin is the ultimate capture mechanism of all of this inflation and devaluation of dollars. But these debt-based systems in every country around the world, the inevitable outcome is that they have to print, and they always have to print more. So this is what we're watching for right now, looking at global liquidity ticking up right here at this level. Who cares about BlackRock? Who cares about Fidelity? Who cares about banks and stablecoins? If you focus specifically right now just on what's happening with global liquidity, the risk narrative, and the need for money printing and when that might come. The tariffs right now, even if you hate Trump, even if you hate the tariffs, you think they're so stupid. Understand that it's putting a global circumstance in order right now that we're getting to that point where money printing is becoming much more likely. Now, money printing is terrible because it devalues every hour spent working to trade your energy to get that dollar, but now it's not worth as much, and so you can buy less with it. It is terrible that money printing exists, but if you get yourself at least educated or actively engaged and invested in a capture mechanism of that terrible flaw in fiat systems like Bitcoin, like stock market, like tech stocks, which are on a major pullback right now, then you can protect yourself and capture the inverse side of that money printing, meaning your assets go up in value over time. Now, you have to ride the waves of the chops along the way, meaning the downturns that are happening, but we are on the precipice of that next major wave to the upside. Now, continuing on, check it out. I've been talking about this for months. This is a capital flow. It's basically like looking at the money flow when we're looking on TradingView, but we see this in previous cycles like 2017. The regular retrace to money coming back to basically the zero mark, and we get a large push up, a capital inflow coming in, resets back down on a correction, larger inflow, resets back down in a correction, larger money flow in. You see how this really is kind of like this persistence exponential wave? Right now, we are sitting right here like we saw back here in 2015 into 2016 before this major leg. We're resetting right now. We're not having this huge flood out. Everybody sees what's going on the agenda looking forward on Bitcoin, specifically Bitcoin, because of the ETFs and the pension funds and the sovereign wealth funds, the strategic Bitcoin reserve in the US, the Bitcoin Act about them potentially buying up to 1 million Bitcoin over the next 5 years. And the corporate strategies like MicroStrategy and MetaPlanet, and the list is only growing there, where they're building a Bitcoin treasury mission with their companies, only adding to buying pressure. We are just now on the cusp, and we're over here looking at Bitcoin going, let's come back over here. We're looking at this and we're like, oh, it's down, but I mean, it's only retested a previous range high. In fact, this was that other signal I was telling you about. The volatility does serve a function and potentially a signal. Is this a signal for a reversal? What is that? This is the VIX, volatility index on the S&P 500. What do you notice when the VIX peaks? When it has these large waves to the upside, when it has a large wave to the upside, out of context here, another little peak here, another peak here. Now, in this case, this did not signal the bottom. However, had FTX not collapsed, this was that bottom floor most people were watching on Bitcoin. And then we had the FTX collapse that finally got to that bottom. But this did forecast that next, at least in correlation, I'm not calling it a direct forecast, that, this signal of that move to the upside. And then, we had the pullback on Bitcoin. The VIX flashed to the upside. It was a bottom, pushed back up. Same thing. Look at this. Breaks down, has a little consolidation. The VIX, the volatility index, has a bit of a peak here. And look what this signal, bam. Same thing here. Chop, 6 months into the 7th month. Nice peak here. This wasn't the direct bottom, but after this peak on the VIX, we did break back down, but we got a higher low, and then we got that ultimate move from, in the 40, 50s, 60s, I believe this was, all the way up here to $109,000. This is now, look how much higher this has gone, almost exponential, and that is incredible. If you zoom back out as well, we see, let's go over here. Look at this, COVID. Look at the flash on the VIX, and look what that was, a great buying opportunity. So this is just an interesting correlation I saw yesterday. I'm not going to call it a direct signal, but there are some interesting correlations there when you look at it. Let's go ahead and take off the volatility index there. Now, when we're looking at this, we also have to recognize that we did get the death cross. We did get the death cross on the daily. And I just want to point out, I measured this out. It's about an average of 51 days, which is basically 67 plus 35. These two times we got a death cross. But what do we see higher? What do we see higher? So we got a death cross. And what do we, I'd kind of average these two. Could we plan on potentially about May 28th for this for the price to swing back up and get back up here into the 90s? Or are we going to see a strong V-shaped correction? It all depends on how swift the change or news cycle, is influenced by what's happening with tariffs. And if a major pivot happens there, that's very good or very bad. Everything's on a razor's edge right now. So continuing on, I want to run through these last few things and we're going to get into some more TA. We got that. Let's see. The Justice Department dismantles the crypto unit at the Justice Department. This isn't the White House Crypto Task Force. The Justice Department crypto unit, basically clearing that path forward. We don't need the Department of Justice regulating crypto. We have the SEC, we have the CFTC, we have the Crypto Task Force in the White House. There's plenty of bodies there. This was just part of that let's put the foot on the throat of everybody in digital assets method that we saw with the last administration. So this is just clearing that path forward a bit more. Now, when we look at Bitcoin, we're at about a 32% correction. It's not the end of the world. This is normal. Even in this cycle, we saw 22%. 22%, 21% from this peak. This was the ETF sell-off. It's over only to launch. Okay. We went beyond, we broke all-time high before the halving. So some people were thinking this was the top, and what we get, just a lot of consolidation here with, several moves of 17 to 20% up, down, but this ultimately was about just shy of 33%. Now, similarly, where did this go? Boom, right to the previous range high. Now, similarly here, boom, we launch up. Where is this currently testing down to? Previous range high. Nothing is out of context yet. There are incredibly bearish signals on the market right now that are signaling such doom. And the problem I have with that right now is it does look like the stock market wants to go lower. But if we're looking at Bitcoin as its own chart, it currently is still in a very bullish structure. Until we get down below like 68, 63, then I start going, oh, this is really trying to shake the living life out of everybody. But I'm holding on. Even if we have a hard year and the tariffs persist, which is possible, we may not have great pumpage like we want until the end of the year. You've got to be okay with any outcome because the market doesn't give a shit about you. Once you realize that, all you can do is look to the data, the signals in the charts, the signals in what is going on in this market so that you can make every attempt you can to stay on the right side of the trend if you're a short-term trader or even a midterm trader or trying to find the best entry or exit as a long-term trader. Try to really use data, not the price alone, so that you can navigate for yourself because this market is here for everybody as an individual. Every corporation individually, they're there to make money. They don't care about you. If you're trading against the best algorithms in existence that are all AI influenced and stuff as well. You are a toddler that just picked up a basketball that thinks he's going to go and just jump on the court with NBA players and you're going to dunk on him. It's not going to happen. All you can do is shadow those NBA players and hope that you don't get run over. Once you understand that, you can really start to make sense of these charts and try to figure out where is the risk that I want to take and how much and for how long. That's what we're doing here. Now, continuing, this is that chart I was talking about with the VIX going parabolic, perfectly outlined here. Are we potentially, that went parabolic, are we potentially seeing a bottom? We have to see how that plays out. Because remember, everybody's so frustrated right now, so frustrated. And when you zoom out on the chart, you realize you're right here. Now, I don't mean that we're going to get this massive pump exactly out of this. I'm saying when we look at Bitcoin, let's put it on the 3-day. Let's double click on this to put it on auto. Let's zoom out. Let's look. You see this right here? You see these swings? Let's go ahead and zoom in here. This was scary as hell back here, 2016. Look at that, 40% drop. It's just, but then you zoom out and what do you start to see? You start to see, oh, this becomes nothing. Now I want you to realize this because this becoming nothing, remember how there was, this was only in the price of 400s. Okay. Now what do you see if you come over here? Look at this big move. Oh my God, all the way up to $19,000. Okay, let's zoom out a bit. Okay, come on. My computer is lagging. There we go. Let's go to the weekly. What is going on? There we go. Now double click here. Now see how much smaller this got on the $20,000 move? And then when you zoom out on this, let's go out to the 2 week. You see how much, I don't know why there we go. You see how this becomes inconsequential? Similarly, this move that we're having up right here, once we get over and the price action goes, way, into the 280s, into the 300s, you look at how small this little dip is. So little pump. So when we're looking at the market and we realize that that's essentially when we zoom out and start looking longer term, none of this matters. None of this little chop right now matters. The 3 or 8% difference in where you got in. Take your positions, be smart, do not get yourself chopped out. Now, I don't know why my computer's lagging, but that's okay. Now, ETH dropping below the realized price. Are we getting in? Is this what the price was waiting on? Getting into this sort of max capitulation like we saw here, which proved to be great times for entry on ETH. Well, let's look into it. We're going to look at some TA now. And then we see right here, we see the total 3. Folks, looks like the weekly falling wedge on the RSI here is about to break out soon. Total 3 currently below a trend line that has been in place for 1.5 years. Is this going to be a slight deviation, or are we about to see a pretty big spill to the downside? I don't know, but let's get into it because things are looking good. Because then we also see other signs, which is interesting. Standard Chartered said the XRP could hit $12.50 by the end of the next 4 years, Trump's presidency. Well, let's look at what's going on in the charts. Now, I want to just take a moment here and just say shout out to each and every one of you. Thank you for being here. We got, almost about 1,000 people tuned in. I just want to say how much I appreciate you. You're here. You're going to be remembering this in 2 years, 3 years, maybe even in 6 months. But in 2, 3, 4 years, it's going to be talking about the tariff trade war, the market uncertainty, the price levels. Oh my God, you bought in at 77,000? Not like it's high. They're going to be looking at, in 4 years when price is $678,000 a coin. They're going to not believe that you were able to get in at these price levels. Meanwhile, right now on today, when people are entering new retail participants are like, man, but 77,000 is so high because they're looking at relative to the US dollar price levels. Look at Bitcoin to the relative impact that has on a limited supply network that's going up exponential in security, adoption, integration, utilization. Governments are starting to utilize these, as mechanisms for balancing power grids, to burn off excess energy, gas waste in energy plants where they can actually convert that to Bitcoin. Strategic Bitcoiners, guys, I don't need to preach at you, but let's get into it. Let's look at what we got. The dollar, the risk matrix simplified. We're in the zone of uncertainty, meaning if the dollar is in this zone, we're kind of still in super chop zone. Yes, the dollar did break down here into the risk asset pump zone. However, this is not confirmed. What do we always want to do with price action on anything, even on an index like this? You see like this pushed up into this, it broke down, retested the trend line below, broke out, tested it, went. Similarly, it happened again right here. Try to break down, bounce. Now it broke through, rejected, confirmation, continuation. So what we're seeing on the dollar value right now, so much global uncertainty in what's going on. Potential risk of China dropping their bonds and treasuries and stuff of investment, which would be pretty detrimental to what we're seeing in the dollar. But we really, at a basic level, want to see this start to roll down and, move to the downside. I don't know how deep it's going to go, but it's, look how deep it's gone before, down here into the 90s. But when you see this dropping, it's been a pretty strong correlation on Bitcoin performing well. If you look at this right here, Bitcoin versus the DXY, what do we see? Let's go ahead and click it 17 times for it to work. You guys like that game? I have to do it every time on this website, and that's okay. Dollar up, which is blue, Bitcoin down. Dollar down, the blue, Bitcoin up. Now it's a very, very crude correlation, but they have pretty strong correlations in what's happening in markets. It's not just Bitcoin, it's risk assets in general. Now, when we get over and looking into Bitcoin, let's come over here, double click here. Just a reminder, I sit at some of my colleagues' desks or watch them at their desk when they're trying to show me something and they're doing this freaking don't do that. Just double click. It puts you on auto mode. If it's on log and you want to go to if it's on non-log, it's on linear. If you want to go to log, come down here, press L. And then if you're zoomed in and say you're really looking at something, you don't need to do this freaking nonsense. Double click, goes completely to auto mode. And if you go like this, if you hold shift, you can just stay right there. You see that? It keeps you right so it doesn't keep moving around. Now, if you want to just adjust further, you can. Quick little tip there. Now, getting down into the 4 hour, see how it's all messy? Cool. Double click. See that? Now, what are we doing here? We got a bullish divergence here on Bitcoin. We saw it on the, let's go to the, where did that go? There we go. Right here. So RSI up while price action down. Doesn't mean this is going to just straight break out, but it does mean the conditions are met to start a move. What do we get? We got to move. Where did it reject? Right at this trend line that we had watching. If this was a falling wedge, right? It came right into it, which is basically the projected trend line from these range lows. Came up, rejected, came back down. But it came right into the target that we had on the chart. I'm really watching to see if this is going to be the max. Let's really convince people this is dead. This is what I'm going to call this zone right here. Let's just scare the life out of the last week hands in this zone in the $64,000 to $72,000 range before going up. I think that's a real possibility because of all these trade war things going on right now. If we don't get that and don't start testing into the zone, then we may be starting to form a bottom here. Why? Because it's, this is pretty pronounced to the downside, but then we have a low, barely a lower low. And then this is kind of, able to trade sideways. And this is starting to round out a bit along with the bullish divergence that we're seeing in the chart. So all eyes are in this zone right here, what happens. And it may chop for some time into April, into May, like this, into this target that we measured, which is that 51-day target, which is the average of the last two death crosses where price broke down and it was over. Well, 67 days later, the price, look at this on the breakout, 75% pump from the day the death cross happened was basically right here. Okay. Okay, let's see. That is a 106% pump after a death cross. Now, is it always going to play out like that? No. But as it stands right now, that trend is not broken. So we're going to be paying attention to what's going on. When we get down into the other things, ETH, as I said earlier on, ETH is looking very, very poor. No bullish divergence, just breaking down into the confidence. Is kind of the momentum of loss of confidence right now in ETH is kind of gaining steam. And you see this on the ETH to Bitcoin chart too. Look at this. If we go out to the monthly chart, double the square out like this, look at this. This price right here, well, last time ETH was this devalued compared to Bitcoin was in 2020. So they got a lot of ground to make up while you're getting all these other protocols like Solana and Avalanche and Cardano and Link and HBAR, Sui, Say. I mean, the landscape of competition is insane right now. But I'm not counting ETH out. I just think it's in a very heavy headwind right now with narrative, which is a major thing in speculative markets, and also the more positive momentum we're seeing with other chains. However, ETH still makes up the majority of the ecosystem for alts. So you have to take that on account. There could be some whale games going on there too. World Liberty Finance has been stacking into ETH. So as well as, there's ETH ETFs and Bitcoin ETH ETF indexes, and there's a lot going on. But XRP, let's get it off. Let's get it on log there. I mean, so this is, just pump, dump, pump. Are we going to get that next leg down from this, or is this going to be a bull flag and just absolutely rip? When we get this, that's on the monthly. Let me double click out here. So on the 8-hour chart, we're still within this zone. We're starting to get a little, I don't want to call it top heavy, but you see this is trading sideways. It breaks out, but now it's trending down, and now it's getting into the point where this is starting to form new lows of this range. Now, this very well could be a Wyckoff accumulation or a Wyckoff distribution. We have to see the winds of change right now in the markets if we get a quicker resolution to these trade wars or if this is going to persist. If this is going to persist, we will likely see this break down and come down and test the lines that we've already had on here, down here in $1.43 and then down here into the $1.11, potentially even down back into the 76 cents. I don't see this scenario happening because it's on so many different players' radars right now and different integrations on, banking integration levels and Swift payment integration potential. And there's so much corporate awareness of XRP. I don't really see this coming all the way down in here, but as we're seeing it right now, we're not really seeing on the daily. I think we got a little bullish divergence here. Let me refresh this. I think that's why. Let me reload the page because I've marked up a bunch of charts and they're not showing. Yeah, you see, now it's showing up. So we got bullish divergence on the daily here on XRP. We do have that. Look at that nice wick, meaning the bulls tried to take it down. The bears tried to take it down. The bulls ate it right back up. If this kind of fails, though, this very well could come back down and test a bit lower down into the $1.55, $1.60 range. So everything's hinging on what's going on with the tariffs, with the trade wars, with the negotiations, with the softening stance of some of those things. Or if they get more entrenched and we also start seeing price rises, and we got the CPI data coming out tomorrow, the FOMC meeting minutes coming out, and everybody's hyper focused on when the rate cuts might be signaled based on what was discussed in the FOMC meeting last month. Everything is looking for any signal ever right now for potential bullishness or to get ahead of potential bearishness. Because you also see it on Solana, bullish divergence. You see the lower lows here on Solana while we're getting higher lows currently are starting to. This is not confirmed, you see, because this is a little move, but if this starts rolling over, then this bullish divergence will evaporate. So we need to pay attention to this. That's on the daily. What does it look like on the 2 hour? Looking weak as can be. Look at this breakdown. If it bounces, where's your first line of attack to watch for a known level? Ask yourself. If this bounces, you're going, okay, where do I need to watch for my first warning shot? Come to the previous range low, go right here and press Option J or Alt J if you're on a PC. And that gives you a horizontal ray. You would have known, boom, on this starting to reverse, you do a horizontal ray and look at where the price came into. Boom, right into it. And we got a triple top really with the wick, but boom, boom, coming back down. Now what we want to do here on the near term, draw a fib from the bottom to the top. That's Option on Mac, Option F. If you're on PC, it's Alt F. Just watch. I'll click on the chart. Now I do Option F. Nothing happens, right? And then you click on the chart. Then you move the mouse. Then you click again. That's how easy fibs are. Or you come over here to the side toolbar and it's 1, 2, third one down, and you go to fib retracement to get access through the toolbar. Just showing you some little tips here and there, everybody. But look at this. Currently, double top into the known trend line on Solana. It came down. This would be the bullish bounce zone right here. Boom. 382. It's starting to lose this. If this does lose, we're watching for the target here, which we already have a line. This line that comes I don't want to scroll all the way back there, but the line goes all the way back there, which is perfectly in line with where this golden pocket is right in here. So I'd be watching for a target in the 101s. I did not realize Solana lost 100. And this $101 range. Super bearish news on the market. Things are really starting to drop. Then I'm looking for the lower target, which is down here in this box that we outlined already, down here in the $89 to $84 range. Let's look at a couple others. HBAR with that news. I want to get this on some smaller time frames. So what we got here. So it broke down. We're looking for either the previous range lows, which are right here. It did get through those, right? However, you also have this trend line that we've had drawn on here for some time. Let's go to 6 hours so you can see most of it. This rejection. Okay. It went above, great deviation, bounced above it. But then look, rejection, currently rejecting. It's almost as if the previous price action gave you some signal as to what was going to happen next. Then you come over to Aerodrome. This is scary because it has broken down out of this falling channel. Now, not only did it break down, what we bounced here, came up, lost it, came up here, and are potentially confirming the breakdown for a potential bigger move to the downside. However, I will admit, I'm very bullish on Aerodrome. So with that, the problem is, look at this. Look at this. Very inefficient zones here. I'm not even going to look over to the right. Why is this? Okay. I'm going to just kind of put this here, option J. I'm going to put this at the bottom, option J, and see how that pans out with what's going on with price action now. So that's a bit scary, because the reason I did that is because we got a bit, I'm going to put this actually here, the top of these candles. This is very inefficient, meaning no real price action happened through here, sliced right through. So these two zones are the two levels I'd be watching to the downside with Aerodrome, and that would put Aerodrome potentially having a target lower at about 25 cents. And if you're bullish on Aerodrome, you should be excited that you might be able to get here. If you're still in for a longer term trade, great. Averages down the average price of your entry. Let's see, Moonwell. See, breakdown, rejection, coming down. The best thing about this is if this does form this W pattern before a continuation up, but things are looking a bit soft right now. If Moonwell loses 15.4, where are we looking at going? I mean, there's no previous price history, so we can kind of go, let's go option F. Oops. Option F from the bottom to the top. Now it gives me fib extensions since we have no previous price action. So I'd be watching on this breakdown right here on the one, which is this low. This would be the next target down, 11 cents, basically 11.5. And then it's not 11 cents. There's a zero though, my bad. 1.5 cents which is this bounce. If this loses, it'd be 1.15. The next target down ultimately be 9/10 of a cent. Right? Or whatever that is, 0.001. So that's how you're doing that. But guys, bullish divergence on near, but things are looking a bit weak, looking like it's failing. It's caution zone right now. Look for opportunities. If you're going to take a shot, you got to be willing to hold or exit, with your stop losses being hit. But I love you guys. I appreciate you guys. Really do. Mr. Biggs, good morning. Dylan K, Granny's Garden, everything top 10. Mr. Biggs. Crypto Billy, my guy. Make sure you check out Giver's Gain, everybody. Nick Galley. Who else we got? We got the whole crew in here today. Big love to each and every one of you. Who can we send this off to after me? Oh, it's a Blockchain Basement. That's right. They're on after me today. So Blockchain Basement. Yeah, it should be live right now. So I love you guys. Head over to Blockchain Basement. Show some love. And with that being said, protect yourself. Be cautious, take risks that you're okay with. Don't just keep trading yourself out of stuff unless you have conviction on the trade you're going to take and an execution strategy. But I love you guys. I appreciate you. Adios, muchachos.